Hello everyone, welcome back to Fundrise Finance. In today's video, I want to discuss how much my portfolio made as options income for the month of December 2023. So without any further delay, let's get started. So this is my options tracker sheet that I discuss every month in such videos. For those watching this video for the first time, let's just quickly discuss the fields over here. First, we have the stock ticker with the option strategy. Now that could be covered call denoted as CC or a cash secured put, that's CSP. Then we have put credit spread, PCS, or a call credit spread, as CCS. So these are the four primary strategies that I use: in the amount of contracts, then when the contract was opened, was the expiry date, when the contract was closed, how many days was I in trade for that, then the amount received section, which will have the strike price, the action taken, how much premium I received, similar for the whole contract, then the commission and fees, and the final amount received. Coming to the amount paid section, we have the action taken, how much premium I paid, and that's for the whole contract, commission and fees, and finally the final dollar amount paid for it. What's the profit and loss? How much amount is committed for that contract? What's the yield to strike? That's the premium received divided by the strike price. So if it's closer to 1% and I'm able to close that contract successfully, making as much profit as possible, I consider it as a perfect trade. Then we have the return on capital, the annual return on capital. Then you have the comment section to make note of any comments like when I rolled them and stuff. And then I have the after tax profits. So any trade that generates me a profit, I consider 25% of it as a taxable part. That's just to keep myself honest. And out of all this, there's one field that's very important. That's the suggested sell. What I do is whenever I sell a contract, I try to buy it back at 75% profit. So that's what I dictate over here. Many people go for 50% profit. I've seen people going up to 80-90% profits. In fact, few just let the contract expire. So in the options world, it always helps you to close your contracts. So whenever I sell an option, right away I create a closing order at the amount that is dictated by the suggested sell. And if the contract is, let's say, going away from me or not working the way it's expected, I modify it later. But having your closing orders set out right there at a particular price helps take out a lot of tension. So yeah, with all that jargon out of the way, let's get started. Now I had a few option contracts that came over from November, like this one on City, whose strike price was $41.50, but the financial stocks literally took off in November and December. And so I had to roll it, call it as BTCR, like the buy to close roll, giving me instant loss of just over $203. And there'll be a subsequent sell to open order expiring December 15th, which then again on December 15th I had to roll it further, and that is what we see here. And even by December end, the city stock was nowhere closer to my strike price, and so I had to further roll it into January. They were able to slightly increase my strike price from $41.50 to $42. So yeah, that's this one is expiring on Jan 19th, where the city stock price is hovering around $50. So that's like more than 15% away from the strike price of $42. I'm really not sure if I can salvage this trade. Let's see if I can roll it as much as possible. Coming back to the November trades, I had the Russell 2000 ETF IWM, on which I had a put credit spread, which I was able to close for a profit close to $10. Then covered calls on Lucid, Series XM, and SoFi, all of them generating close to $3 to $6 or $7. The next comes Verizon, which similar to Citi started to go away from me. I had a strike price of $33, which then I had to roll it. You see here the roll transaction expiring Jan 5th. Still Verizon is more than 10% away from the strike price. I'm not sure if I can roll it further. Let's see what happens. And similar to Verizon and Citigroup, I had another third option contract that was going away from me. This is on Bank of America with a strike price of 28. I had to roll this all the way up to Jan 19th. So the Bank of America is close to $32. That's like more than 10% away. Those financial stocks start the earnings season close to end of second week of the month. So I hope to see some financial stocks like Bank of America and Citigroup take a dip so that I can roll these further into the future. Then I had a card call on Lucid, gave me $8. And then I had a few put credit spreads on SPY, QQQ, and IWM, giving me close to $10 to $12. Then card calls on Sirius XM, SoFi, again around $5 to $6 each. You may say, hey, $5-6 here and there, they all add up. These are not costly stocks. SoFi stock is around $10 or $9. Series XM is at between $5 to $6. So you can't expect a lot of premium out of these unless you own multiple contracts. These are just one contract. That's what I play with. Then I have call rate spreads that went in my favor for IWM, SPY, QQQ. I started to focus more on the index ETFs than individual stocks because majority of my capital was tied up in the three biggest ones I just discussed, like Verizon, Bank of America, and Citigroup. So here I just had $100 into each of these ETFs and I was playing around with it and generating decent profits. $10 of 100 is like 10%. And imagine that doing it every few days. The numbers add up. But you do get a shocker once in a while, like in this case for QQQ, where I had to close a transaction for a loss. Options are not always profitable. Sometimes they do go against you. So you have to deal with the expectation over there. So you can't expect profits all the time. There will be days where you have to accept the loss and move on. Or in this case, like for the SPY and corporate spread, I had to close out for less than $1 profit. Still, a penny saved is a penny earned. Then I let go a few to expiry, like this one on IWMs. So yeah, IWM was pretty profitable for me in the month of December. The small cap stocks literally going way up towards the end of the month. Again, I had a few profit generating ones on the single stocks like Medical Properties, Sirius XM, SoFi, Microvision, all of them giving me minor things, but still, like I say always, small numbers do add up. You can see the list of all the transactions that I made in the month of December. So if I sum up all of them, I see a count of 130 transactions. Adding up all of those numbers, the total comes down to $233.57 for the month of December, which is very close. In fact, almost identical to what was in November. Here's the capital return, 1.42%, same as what was in November. But the best part of it is, majority of this capital was tied up in my Verizon, Citigroup, Bank of America, on which I could not generate much. Majority of this income for December was through credit spreads on the index ETFs, SPY, Triple Qs, and IWM, which need just $300 capital, on which I could generate more than $150. So yeah, if you play your strategies well, you can generate returns on small capital. I'm not saying that's the best solution, but at times smartness can give you good results. So overall for the year 2023, I made $2,975. I can say almost $2,976. And considering the overall capital of $16,435, that would make a return of 18.1% with just over 9 months since I started the options journey. I would say that's a pretty good start. Hope to see better returns in the coming year. I will do share my options journey with you every month. Hope you all found this video valuable, and if so, I would appreciate if you could hit that like and subscribe buttons so that YouTube can suggest this video to many more people out there, and that would really help this young channel. So until we meet in the next video, let's try to do as much as possible to be financially healthy and keep taking those strides towards financial freedom. See ya. Bye.